Hi, everybody. This is Howard Cleaver with the latest episode of the Power Briefing from the headquarters of O3 Energy in Dallas, Texas. Today, we've got some very special guests with us. We've got a twofer here. We've got Yeager and Nick Allen. They're partners with the Radnor Property Group. Nice to see you all. Thank you so much for being here today.
Hey, Howard, thanks for having us.
Yeah, you bet. You bet. Let's just dive right in. Let's get into, what you guys are all about and what you're trying to get accomplished over there at the Radnor Group. The Radnor Group, I know, is very involved in P3 private public partnerships. And let's talk about the P3s and your market position, where you stand in the market. So you've been in P3 development for 25 years. What's the biggest shift you've seen in how institutions approach these partnerships?
If you don't mind, maybe just do a brief overview of Radnor and sort of set
Yeah,
the context if that's
absolutely.
all
So
right.
Radnor Property Group is a P3 development company. We're headquartered here in the Philadelphia area. We have regional offices in the Southeast and Northeast. And so we've worked with colleges and hospital systems and universities across the country for on-campus student housing development projects. We've worked with over 35 institutions to date, totaling over $4 billion of capital projects, and predominantly have been focused on the East Coast, but as we've grown, have really expanded to having a presence across the country.
Fantastic. Yeah. Thanks for the snapshot there. Back to the question. Now that we've kind of set the table with what you do and who you are, what's the biggest shift you've seen in how institutions approach these partnerships in the last few years?
Yeah, I think Howard, I'd highlight a couple things, and I've been with Radnor for about a decade, but in the industry and some shape or form for about 20, and I think as Cole mentioned, we've been around for about 25. There's been a lot of change in the P3 space over the past few decades. Probably the most meaningful is broadly acceptance of
Hmm.
P3s. They have become far more common. A number of institutions a decade or so ago perhaps might have said, we're not interested in undertaking a P3, but many institutions, large, small, public, private, they're all considering a P3 as they try to grapple with the challenges that the higher ed space is seeing.
Yeah, fantastic. Yeah, it's a way to draw in that private capital which wouldn't otherwise be available for those sorts of projects. It's a pretty elegant structure, if you ask me. How are rising construction costs and capital constraints changing the P3 landscape? We've got the tariffs on the table that have come in. I know material costs have gone up and or sideways or down. It's a crazy situation we're in right now, and I know labor markets are pretty crazy as well. So, how is that impacting what you're trying to get done in the P3 landscape?
Yeah. So, another thing, Howard, just a little bit to your prior question that we've seen in the P3 space is, a change in the scale of projects,
Mm,
which in some ways helps mitigate some of the cost inflation that we've seen over the past few years, but also the complexity of these projects. In our world, a lot of these used to be student accommodation only. Now we're seeing bundled projects or projects that try to tackle housing, energy, other asset types. And to your question of managing increased cost, sometimes increasing the size or trying to sort of cross collateralize these assets can actually be really helpful, that you can
mm.
control not only the real estate asset, but the energy asset as well. And so we've seen a lot of synergies perhaps in that regard. Another point I think to raise that we've seen is around the size, the efficiency of the projects. As costs have increased, we've had to figure out how to manage that. And our teams, notably the design teams and our operating partners, have become very, very focused at what's the right size, particularly in the residential space, for the units, for the amenities, et cetera. And so that's really been a big focus of ours. And then again, just overall operating efficiency, really taking a close look at all the operating expenses, but particularly those utility expenses as being so
Mhm.
meaningful to a successful operation.
Yeah.
Just to add to that, Nick, I'd say that the construction cost inflation issue was so prevalent 2 to 3 years ago, and it was affecting
That's true.
every project. P3 or non-P3. And, we and the rest of the P3 developers in our space certainly had to contend with those. I'd say over the last year or so, we have certainly seen inflation on the construction cost side abate a bit, to the point where our CMs that we work with on these P3 projects are able to hold pricing 6 to 9 months and sometimes even
Oh, that's
longer
great.
for projects, whereas that was certainly not the case 3 years ago.
Well, that's fantastic. Given the supply chain issues that happened a couple of years ago were just horrendous. But that's good to hear that the tariff situation hasn't impacted your industry as of yet, anyway. But yeah, that's good. 6 to 9 months to hold. That's very, very good. What operational challenges are you seeing across your portfolio that you weren't seeing 5 years ago?
I'd say,
That's
and I
interesting.
don't know that this is necessarily a challenge, but we've seen more and more P3 projects on campus that are trending towards portfolio monetizations, or P3s where multiple residence halls, for instance, might be lumped into one portfolio project in a single transaction. And what that does is it creates a very robust set of affiliation terms where oftentimes the university or institution is providing certain services to the project. For instance, student-facing services, where a residence life department or student life department is still active in the operations, but there's now an introduction as well of a third-party private operator running the day-to-day. And so, these affiliation agreements have become incredibly more robust for these types of portfolio transactions that we're seeing, where you really have to solve for each specific role that both parties are, and sometimes more than two parties, are playing in the operations of these assets on campus.
Okay, yeah, you almost have to take a matrix approach when you look at these different entities that are involved. Very interesting. Let's talk about infrastructure decision making in the kind of the next theme that I'd like to approach here. When you're evaluating a new campus project, how do you decide whether to tie into existing infrastructure or build standalone systems?
Yeah, Howard, that's a really interesting question that, we address differently for every project type and every institution. I think, perhaps to oversimplify it a bit, it really comes down to cost. Is
Yeah.
it the most cost-effective approach for a given particular project? Many other sort of layers that go on to that. What's the age of the system? What are the types of utilities that we're talking about? Is it steam? Is it high temperature hot water? Is it chilled water loops, right? All those sorts of things. But then there's other aspects, and we have a really exciting project at App State in North Carolina where they have a natural gas driven steam system, and it has come to the end of its useful life. They have some larger sustainability goals to transfer away from carbon based energy production. And so the right solution there was geothermal and solar and a few other things that were non-carbon based. And so that not only helped them manage their capital expenditures, but it also helped them achieve their sustainability goals as well. So, every institution, every project is sort of multifaceted, but it
Yeah.
really is primarily driven by what's the best financial decision.
So you mentioned institutions don't often know their true utility costs. How common is this problem?
Well, so I don't, again, a great question, Howard. I'm not sure that I would say that it's a problem. I would say that it's a challenge to be solved through the lens of a P3. So,
Yeah.
as you know, many of these campus infrastructure systems were built sometimes more than 100 years ago, at least,
Yeah.
some components of it. And they were not built to contemplate, not only a P3, arrangement, but different asset types, whether they're, wet laboratory type facilities with high energy use or, academic office buildings. These were just set up in such a way many years ago that they don't lend themselves easily to a P3. And so at every
Yeah.
institution, the amount of data that they have available and sort of the granularity with which they look at it is different. And we've got great teams that help us sort of look into that. I'll say that we have, many national assets, a lot of really good data that we bring to benchmark against what the institutions may think are the operating expenses for a particular building to plug into their system. So we help sort of triangulate that based on other data. And sometimes we're able to make it work based on their current sort of cost model. Sometimes we have to help them figure out sub metering or different ways of thinking about how do we appropriately capture the expense that this building is putting on the campus system. And so, again, sort of everything is a little bit different.
Yeah, I think we run into this whether it's an energy project or a housing project or an administration building. These district energy systems have provided power and utilities to these campuses for decades, as Nick mentioned, and how that's allocated to each building on campus varies from institution to
Yeah.
institution, whether that's by gross square footage or occupancy. And so these are things that we have to work through with every institution once we become a P3 partner to them. And of course, it's unique at each institution.
Yeah. Yeah. Are you trying to say that, like 80 years ago they didn't know what the electrical loads were going to be in 2025? Sounds
Not
like
to
that's what
mention
you're
all the
saying. Yeah.
engineers that sort of layer on all
Yeah.
the
Yeah.
safety factors on top of them. They have become significant.
Yeah. Yeah. I can just imagine some of these situations. Another question, what role does energy efficiency play in your infrastructure planning and design decisions? You touched on that just now, but maybe you could expand on that just a little more.
Yeah, so it's central to it. To be to the point, when we think about energy usage, the first thing we think about is how to not need that much energy. So we're always
Yeah.
very focused on the building envelope, right? As sort of passive type strategies. And once
Yeah.
we get down to the systems, we spend a lot of time with our engineering and design teams to think about first costs versus long-term operating costs. To your prior question about how are we dealing with some of these inflationary pressures on capital expenses, we are managing it as best we can through the operating efficiencies to really
Mhm.
reduce and offset a lot of those added costs that we can't deal with. So it's really been core to our strategy, I'll say.
Yeah. That sounds like a very robust strategy you've got that one feeds the other. So that's very great. Let's talk a little bit more about Appalachian State. You brought it up earlier, Nick. This sounds like it's kind of almost like a case study project for your company and how to do things right around a P3 development and all the various facets that went into it. So tell us a little bit more about that and how did this carbon zero district concept come together?
Yeah, so it's perhaps one of the most exciting things, Cole, I'll say that we've had the opportunity to partner on over the past few years. App State, North Carolina, one of the constituent institutions of the University of North Carolina system, seen a lot of growth over the past few years and decades. Really doubled down in some of the challenges that they saw during the pandemic in being a community that saw increased sort of in migration from folks that were leaving Charlotte and other major metropolitan areas on the East Coast. And so they are just bursting at the seams in all facets, from
Hmm.
their needs for student housing to faculty and staff housing to academic and research facilities and on and on. And so they had a need prior to the pandemic to redevelop an area of their campus in what they termed as a commercially replicable model to deliver an innovation district that not only met the needs of their community through a K-12 education facility, but also met their own employment needs, creating faculty and staff
Hmm.
housed on their campus that was not available in the community. And it was all tied together, as you said, through this carbon zero district. They had a mandate to get off of their steam system. And at that time, during the prior presidential administration, when the IRA was just coming to be passed, there were some very significant energy tax credits that we were able to bring to bear for the project that made it very, very financially viable for
Hmm.
the institution. So, happy to get into more details, but that is sort of the short story. have just delivered the first component of it earlier this month. So very excited. We've had faculty and staff moving into the residential facilities. The system has been commissioned, and we are in the stages of wrapping up the academic K-12 sort of research facility in the next months.
Wow, congratulations. A lot of great progress there. And thanks for, the overview. That's a really interesting project with all the different pieces that are incorporated there. Now, speaking of the pieces that are incorporated in the project, what technologies did you integrate to, make the business case pencil in this case?
Yeah, so again, they were looking for technologies that not only met the need and were very tested and reliable. And so we have ground source geothermal heat exchangers. There are, I believe, just over 100 wells that go about 800 feet deep that
Wow.
tie all of these together. We also spent a lot of time ensuring that the uses really created a balanced load on the system. So that is a very tried and true type utility, combined with wind and PV that they had already had some examples there on campus, but they also wanted this to be a demonstration type project.
Mm,
So we
yeah.
have some cool, more cutting edge aspects on the solar. We also have some new really exciting technology that's wastewater heat recapture, where we're capturing the heat that's going down the sewer lines to then be utilized for domestic hot water production. So it's,
Hmm.
again, both a replicable model, but also sort of testing the boundaries as best we can on new systems. And the whole thing is set up in a way that we can implement and try new systems together as new technologies emerge, and we can partner with their research folks on campus and just figure out through this sort of innovation laboratory what are things that are worth taking beyond the bounds of campus.
Yeah, very interesting. Yeah, that was my next question is, how do you apply, the learning from this to future developments? But I think you answered that. And that's basically this is sort of it's a what works case study, and then it's sort of a test bed for new technologies and new approaches that you might try out there, and then apply to these future developments that you're looking at. So that's an amazing story there at Appalachian State, and thanks for sharing it.
Yeah.
Let's move on to portfolio operations and management. I know you're not as big in the operations side as the development and, sort of asset management side, but, there's a couple things that maybe you could shine some light on around operations. For instance, how do you approach asset management differently across student housing, multifamily, and hospitality properties? I know student housing is its own animal altogether. So yeah, this
Yeah.
be interesting to hear your
Well,
take.
I'll say this, Howard, they're all their own animals.
Yeah, that's right. Yeah.
And so our strategy is completely different based upon the different asset types that you just mentioned. Obviously, our bread and butter and what we focus on most is student housing. And through our JV with COCM, that does all of our on-campus property management and asset management. Third party, the largest third-party operator for on-campus housing in the country. They're just very experienced in working with institutions. And we talked about it a little bit before, but these complex affiliation agreements is something that COCM, our partners, are very used to. The big difference between on-campus housing and off-campus or even multifamily is the leasing cycle is very different.
Yeah.
So in a multifamily, for instance, you're leasing every single day. Whereas in student housing, certainly on-campus student housing, you are leasing once, at most twice a year.
Yeah.
And that tends to be the biggest difference. And then on the hospitality side, talk about a completely different marketing regime compared to student or multi. So, we align ourselves with experts on the property management side in each of those asset types for every project.
Okay. Fantastic. Yeah. That's a great answer. Nick, anything to add to that?
I think, as Cole said, we really focus on finding best in class operating partners for each asset type. Spend a lot of time doing that, educating ourselves, educating our university partners on what it takes, because they are each their own animal, as Cole said.
One other thing about operations, and we'll move on, is across your portfolio, you've got this It's a great example of Appalachian State. But where are you seeing energy efficiency improvements deliver the best return on investment? Besides that project, that was a very special thing. Where are you seeing it, in the rest of your portfolio make an impact, the biggest impact?
Yeah, I think, Howard, a lot of the similar concepts that we see in the ground up new development. So we have a handful of communities that we undertake sort of light touch renovation all the way up to sort of full gut and repositioning. And we're
Yeah.
always focused first on how can we reduce the energy demand in the first place. So we're always very focused on the envelope, replacing windows, adding insulation,
Mhm.
air and vapor control is always a really, really big thing for us. And then that second part is, what are our mechanical systems? How can we make them more effective, from the units that are in the building to the larger exchangers or condensing equipment, wherever they may be, to do we have the right refrigerants or water source heat pumps or whatever that system might be? That is really where we are hyper focused to control those operating expenses, also to deliver a higher quality experience to our residents so that we can be successful in our leasing strategy long term.
It's great. That's great. Let's move on to funding and financial strategies that you are employing. Which incentive programs and tax credits are actually moving projects forward in today's market?
Yeah, so I think as I'm sure you and your listeners are aware, there have been a lot of very recent changes, and in some ways they are still settling out. But I can certainly speak to a number of projects that we've seen over the past few years, particularly under the expanded programs that the IRA offered that I mentioned a moment ago. The direct pay component of that,
Yeah.
which we utilized at App State, was hugely meaningful for nonprofits in general, but particularly in the higher ed space. That gave them access to tax credits in a way that did not exist. It also took out the middlemen that were taking certain percentages of the tax credits and just made every dollar that much more meaningful. So I think that's
Hmm.
probably the biggest change in the space that we've seen in the past, perhaps 5 or 10 years. I'll say that there is another side to that, which is that a lot of institutions, nonprofits, particularly over the past year, a lot of focus from Washington on what is and isn't appropriate for them to be doing. There are a number of institutions that are hesitant about engaging or taking tax credits,
Yeah.
particularly federal tax credits, just because it puts them more in the spotlight than they used to be. So there are
Yeah.
those that say this is so core to our mission that we're absolutely going to do it. There are others that say there are risks, reputational or otherwise, that come along with this, and they may just not be right for us. So that's
Hmm.
perhaps the macro view on it. In terms of what we're seeing successful today and in the near term, it seems that geothermal and the tax credits around that seem to be here to stay and are a very viable implementation strategy going forward. So we continue to see many institutions very focused or interested in opportunities around geothermal.
Okay, that's interesting. The IRA extended, or the one big beautiful bill, the 100% bonus depreciation, I'm sure helps with the construction side of things. But one thing they did leave in there, they kind of attacked solar a little bit, but is the battery energy storage systems. And so I'm just curious, have you looked at any of that in terms of a strategy in terms of managing energy in your portfolio?
I'll say that we've explored it, but battery demands in a lot of other sectors have been very high. And as a result, the cost of batteries has just been very significant. And we have not yet found the opportunity to deploy those in an economically viable way. Again, sort of going back to the financing strategy or the cost of these, many institutions say these are goals of ours, but the counterfactual of our existing grid system or what have you is this. And even with the
Yeah.
tax credits, if we're paying a 10%, 20% premium, that's just not something that they're able to pass on to their students.
Yeah, yeah, and every dollar counts in higher ed nowadays. It's gotten so expensive. Okay, back to the funding and financial strategy. How do you structure partnerships when working with institutional investors like Harrison Street, for instance?
I think every project is certainly unique. We've had the benefit of doing over 10 JVs with Harrison Street, to your example, Howard. And we've certainly worked with other capital providers in the space. I think for me, as I think about what's changed in the on campus P3 industry from 10 to 15 years ago to today, is the space has just seen so much capital interest and increased awareness, I suppose. And so 10 to 15 years ago, we were seeing, for instance, priority fill or first fill arrangements being very typical, where capital partners were wanting to take no risk. And there really wasn't much of a risk transfer between the institution and the private sector. And that has just completely changed in the last, 5 to 10 years, where as different investors become more familiar with the P3 space. And, granted, higher ed and hospital campuses is a small component of the overall US P3 space, but it's
Yeah,
really grown in popularity. We're seeing equal fill arrangements and really more demand risk being shifted to the private sector than was historically seen in the space.
gotcha. Gotcha. What financial trends are you watching that will impact P3 development over the next few years?
Well, politically, I think that's affecting these days. I guess sticking to the financing side of things, what's been somewhat of a challenge, and this is not unique to our sector in the on-campus P3 space, but development as a whole and even just business as a whole is the volatility in interest rates.
Yeah.
And increasingly, we're seeing more and more of these P3 projects funded by tax exempt debt. So you're able to effectively capitalize 100% of the project costs through public tax exempt bond issuances, which are priced to a base rate. It's called MMD. It's the municipal base
Mm.
rate that all these bonds are priced over. Over the last 2 years, there have been record municipal bond issuance levels, which has caused somewhat of a decoupling from MMD to other macro base rates, for instance, US Treasury.
Mm.
And so,
Yeah.
navigating that and being able to predict them 6 to 12 months out has become increasingly challenging. But, the mitigant to that is that these tax exempt financings continue to be among the most competitive from a cost of capital perspective for all the transactions that we see on campus. And so I don't see us trending away from those types of financings, but it's certainly something that we're aware of as a potential challenge.
Gotcha. Nick, anything to add there around the
Well, I think, again,
financial trends?
to Cole's point, just were some of the things coming out of Washington. There was some questions around what would happen to the future of the tax exempt municipal finance space. And so, particularly over the past 6 to 12 months, we have seen a dramatic
Mm.
increase in the number of issuances. And that's just created some choppiness in the market. We're certainly hopeful and expecting that to settle out now that there's been some clarity on where that sort of sector of the market will end up. But as Cole said, this continues to remain one of the most common financings for on campus P3 developments.
Okay, thanks. Let's talk a little bit about the industry outlook and some advice that maybe you could give some other players in the field or people that are looking to get to enter that field. What trends do you see shaping the future of P3 development?
Yeah, that's an interesting question, Cole. Maybe I'll take a piece, and then I'm sure you have some thoughts to share as well. Howard, I'm sure that you've heard the phrase that many use, which is just the flight to quality
Yeah.
in the higher ed space, and there being winners and losers. So with the enrollment cliff and some of the other pressures in the higher ed space, investment mandates have become quite narrow in terms of the types of institutions that folks are interested in. It's even impacted the athletic space with the consolidation and some of the conferencing. I'll
Mhm.
say that our business approach is a little bit contrarian. We like to say that we're democratizing the P3 space, that there's an opportunity for a P3 for everyone, regardless of the size of your campus or the intrinsics of your institution. There's the potential for a right sized project structured correctly for everyone, and that you don't
Gotcha.
necessarily have to have 1,000 beds and dining and a whole variety of other things, and or be a flagship Power 5 school to have a viable project on your campus.
Yeah, and I think we've been talking about this, Nick, for about 5 years now, and have expected to see more of it. But I really do believe that what we will start to see more of is redevelopment P3s. And,
Yeah.
at Radnor Property Group, we've done a number of those, and they're oftentimes more challenging than new development. But there's a stat that's been thrown out there in our space that there is about $500 billion of deferred maintenance across college campuses in this country. And not every institution needs new housing. And just a redevelopment of the existing housing stock or other assets on campus is a very viable P3 project. And I do believe that we will start to see more of that, certainly for institutions where perhaps enrollment is not growing, but it's stable. And then, of course, as Nick alluded to, given demographic trends, there's more enrollment growth going on in certain regions within this country, specifically the Southeast and the Sun Belt. And so while there will continue to be new development at institutions like those, there's plenty of access and opportunities for others as well.
Gotcha. Yeah.
I'll add one more thing, which is that historically, many institutions have thought about a single asset P3 on a new housing
Yeah.
building corner of my campus. Many institutions, and we've got a few projects that are considering this, look at risk transferring the entire portfolio,
Mm.
whether it's housing or energy or parking or all sorts of other asset types, right? The institutions, many of them don't see some of these things as core to their mission in the same way that they did 10 or 20 years ago. And so why should they be taking the operating risk? Why should they be carry
Hmm.
obligation of maintenance and
Yes.
repair and those sorts of things? So I think that's a big expansion in the space.
Yeah.
The other is this sort of cross pollination, perhaps, of asset types. As we mentioned, our exciting project at App State, that's real estate and energy. Other folks are combining different asset types to undertake more things at one time or to create synergies. Our friends in the advisory space like the terminology bundling, that there is value
Yeah.
that can be created through scale, whether that's first cost, operating costs, or any other aspect of these sort of larger or combined projects.
Interesting. Yeah, I'm seeing increasingly some projects, like senior housing co-located with student housing near university campuses and so forth. So I think that would be a great example of, this cross-pollination that you're talking about across asset types. It's a pretty neat arrangement that I've seen so far out there. How important is energy efficiency becoming for P3 project competitiveness?
I mean, I'll say extremely importantly, to take it from a different angle, what is the number one thing that we hear from every institution, somewhat regardless of asset type? Affordability. The
Yeah.
cost of higher education continues to rise in an unsustainable way, and that has created all sorts of challenges for institutions. Perhaps number one of which, when combined with some of the other enrollment issues, is just their competitiveness. Are they able to recruit and retain the students that they want and need to continue to have their institution be viable? So, as it relates to the expenses that drive that affordability, it is paramount that that is understood and controlled in a long term way so that we can deliver affordability.
Fantastic. Yeah.
And we see energy efficiency as something that always comes up with our on-campus partners. And so it's something that we're always made aware of and certainly try to address. I guess adding on to Nick's point, I kind of see each project as balancing three main things, and that's cost, risk, and quality. And,
Mm.
In that quality bucket are aspects and components like energy efficiency.
Yeah.
Cost has to deal with the cost of those components and how much you're willing to pass on to residents or make more affordable rents for students. And then of course the third is risk transfer. And so who is taking risk in certain departments between the private sector, developer and investors versus the institution, and balancing those three is something we just have to do with every single project.
Yeah, very interesting.
One, if I could add, Howard, sorry, one
Yeah, you bet,
additional
Nick.
point with
Yeah.
Nicole's is understanding, from an institution's perspective, I think it's really critical to understand why you are seeking to engage in a P3. And to Cole's point on risk transfer, some institutions want a P3 to transfer all of the risk. Some
Yeah.
institutions want access to tax credits or creative strategies or cost control or all sorts of other things. So I think when an institution is considering a P3, really understanding what they're trying to get out of it is really critical.
Gotcha. Gotcha. For institutions listening who want to explore similar projects, what's your advice on getting started?
That's a good one.
I think from my perspective, we see the most success when there is a clear committee established at the institution to guide the project. And even more specifically, perhaps, Howard, is a project champion. And so
Oh, yeah.
who are we as the private sector developer and the leader of this P3 team engaging with on a day-to-day basis? Because throughout the pre-development period and even the development period, issues and obstacles arise and they need to be resolved in short order. Who is our primary contact to be able to solve these things together? And
Yeah.
I think that would be my advice to institutions thinking about P3s is really take the time to think about how you'll set this up internally and help guide the process, because it really is a partnership, instead of completely, private sector development. It's a public-private partnership.
Yeah.
And that's very important to us as well.
Yeah, Howard, I'll say, for an institution, P3 is different in every way, shape, or form than the way that an institution operates. And that's not good, nor is it bad. It's just different.
Yeah.
And so for us coming from the outside, there in some ways needs to be a culture change or a culture understanding, or again, an analysis of what are the things that are very important to us that we want to stay the same, and what things are we flexible to change to adapt to market conditions or what have you. And so, as Cole said, you have to have that project champion that understands the internal workings of the institution, that is willing to advocate for a project to help others in the leadership team understand what it takes to make a project viable and successful, because we on the outside can bring creative ideas, can bring capital, can bring all of these sorts of things, but we can't, I'll say, change hearts and minds inside
Yeah.
an institution. We can't force a P3 on somebody. You really have to want it, need it, and ultimately accept it. And as Cole said, it's a partnership at the end of the day. And so everyone has their varying priorities that they bring to the table. And you have to be willing to sit down and find a reasonable middle ground to make something successful.
Very good. Very good. Well, we've got one last question I'd like to ask, and it's kind of a general question and open to both of you. What's one thing you wish more people understood about P3 development? That we haven't already talked about? I know that's kind of tough. You guys are pretty exhaustive on the subject. I didn't say exhausting. I said exhaustive.
I I just think in many other asset types, it's easier to have a particular strategy and really form more of a cookie cutter approach.
Yeah.
And I think that each P3 project is totally unique. I think it's very hard to paint the industry as a whole with a broad brush. And so, even though we may be doing a similar project with one institution versus another, whether that's energy or housing or administration or whatever the asset type is, you know, they're all completely different. And so,
Yeah.
I think that that's something that's very important to understand about P3s in the on-campus space in general, is that it's very hard to necessarily broadly define the sector.
Yeah, Cole, I agree. You can't generalize what a P3 is or is not. And again, as one of our friends in the advisory space says, if you've seen one P3, you've seen one P3. And so an
Yeah.
institution contemplating a potential P3 may look at a peer institution and say, this is good and this is not good as it relates to us. And as Cole said, every P3 is unique. You can tailor a P3 to meet your needs. I think the one thing that I wish folks in the space knew, particularly on the institution side, is that a P3 is not a silver bullet. Many institutions are looking to bring in a partner to help them solve
Yeah.
some sort of challenge that they have. And a P3 can be a fantastic tool to help you overcome or mitigate that challenge. But it's not a silver bullet. You can't throw your challenges over the fence and expect the private sector just to pick them up. Absolutely, risk transfer can occur, and there's all sorts of ways to get there. But a P3 is not a simple transfer of risk, silver bullet solution to your challenge. It's a long-term partnership between two entities or more than two entities that will be ingrained and attached at the hip in a sense for a very long period of time.
Well said.
Very good. Yeah, very well said. Well, with those words of wisdom, Nick and Cole, will conclude the podcast. And thank you very much. This was with Cole Yeager and Nick Allen of Radnor Property Group, talking about P3s and all the success they've had. And it's been a very interesting conversation. And I very much thank you both for being on our episode today. And I'm Howard Cleaver with O3 Energy, and that concludes our episode. Thank you so much.
Thanks very
Thank you, Howard.